I'm Kyle Malnati, your host of the Calibrate Real Estate Podcast. At Calibrate, we exist to help people create generational wealth through real estate. My personal mission is to encourage, empower, and educate you by sharing best practices from business leaders that are proven winners. Calibrate crew, welcome back. This is Kyle Malnati, your gracious and fearless leader. The Calibrate Real Estate Podcast is happy to welcome Jon Hilley. Jon is Mr. 1031 with 1031 Specialists, and they are all over the U.S. They've got folks distributed in California. Jon's in Denver with me here in the Mile High City, and folks in Florida. Their number, 631-GET-1031. A little bit about Jon Hilley, and we'll have a 1031 exchange conversation. Jon went to the University of Florida, highest honors, and that was a little while back. But most importantly, Jon worked at Goldman Sachs. His business partner and founding partner was also with Ernst & Young. They've got great background. We're going to have a conversation about 1031 exchanges, capital gains, but also private equity, scaling, GPT, Chat GPT, and also their AI formula on their website. Jon, welcome to Calibrate, a real estate podcast.
I've been looking forward to this. Thanks so much, Kyle. It's great.
Me too. Thanks for getting together. First is fairly remedial for a lot of our listeners, but I'm going to go for it anyways because it's one of the most common questions that I get in any sort of listing presentation where I have a client that's interested in selling a property that they've owned for a period of time. They're always asking me, okay, what goes into a capital gain? And I'll tee you up in addition to a capital gain, and you'll tell us how to defer those capital gains, but also how is depreciation recapture factored into capital gains?
Great question. And maybe the most important, because I think people get surprised. Real estate investors are surprised. When you go and sell your property, you are subject to as many as 4 layers of tax, okay? And everyone thinks, well, capital gains. Well, federal capital gains is certainly one of them. And that is 15 or 20%, depending on how much money you make. But there's also state tax. There is this thing called net investment income tax, which is 3.8% if you make over a certain amount of money. And then finally, the hidden one is the depreciation recapture tax. If you are in a state like New York or California, those add up to really as high as 40% of your gains, okay? So with a 1031, you can defer all 4 of those levels of tax, right? But specific to the depreciation recapture, this one is a shock to people, which is I bought a building 2 years ago for $1 million. I used bonus depreciation and cost segregation to depreciate it down to 0, and I'm selling it today for $1 million. I have made no money. However, I will be taxed $250,000 on the $1 million of depreciation recapture. So that is one that surprises everyone, but needs discussion early so you can really mitigate these taxes. You can even lose money on a property and still pay tax to the government. But with a 1031, you can defer that depreciation recapture, just like you defer state and federal and net investment income tax.
So depreciation is just that paper loss that I learned about when I had my accounting classes as a finance major in college. And it's one of the most beautiful things, but you owe it back as a taxpayer if you don't do the 1031 exchange. So just as a quick refresher for people, Jon, the question that always comes up with 1031 exchanges is remind us of the timetable that people are forced into, if you will, on a standard forward exchange. But then let's also talk about the safe harbor for the reverse exchange just briefly.
Absolutely. So I think it's important to note that a 1031 exchange transaction happens just like any other real estate transaction you've been involved with just a couple of exceptions, okay? Exception number 1 is you are required to hire a qualified intermediary. That is what my firm is, 1031 specialist. That's what we do. We do the exchange facilitation. And then you just got to hit these two key deadlines to be successful. Okay, so you hire a QI, you identify what you want to purchase next by day 45. Now the clock only starts the day that you close on the sale of your property. Okay, so you have all of the time when you're under contract or when you've listed it to start planning and preparing for these two deadlines. But the clock starts the day that you sell. You've got 45 days to identify what's next. What does that actually mean in practice? It means we send our clients, we'll send you a form, and you're going to fill it out with 3 property addresses of replacement properties you may want to purchase. Okay. And then from day 45, you've got an additional 135 days to successfully complete your exchange. And what does that mean? That means you must close on one or more of the properties that you identify. You cannot go and buy something that you did not ID. So what's on that ID form really, really matters. So in aggregate, you've got 180 days split up between the 45-day ID period and then the 135 days that follow that.
It's a great refresher. Now, for people that are looking at doing reverse exchanges, why would someone look at doing a reverse exchange versus that standard forward exchange that we all think about?
So reverse exchanges across the qualified intermediary industry are a couple of percent in aggregate of the total exchanges that happen. And what we see in our client base is the highly capitalized, well-off, high net worth family office clients. They can do the reverse exchanges because you don't need financing. Okay, they have the cash to buy first, and then they can sell later and complete their exchange. So the reverse, here's my view on standard forward versus reverse exchange. Okay, do the harder thing first. If in your market and in this particular environment with this particular asset, it is harder to buy first and you have the financial means and you're capitalized to do it, then do the reverse exchange, right? Go buy that asset first if it's easier to sell next. Or if it's harder to sell first and then buy next. So really just do the hard thing first to de-risk those timelines for you. Okay, just make your exchange as easy as possible.
It's great advice. And I think that is the interesting thing that you mentioned, John. So many of our clients are in that camp where they're family offices, they've invested in real estate for a long time. I met with a guy at a showing the other day that grew his portfolio from doing renovation projects and selling single family houses that he renovated starting in the early 2000s. Started with $1,000 capital gain that he did a 1031 exchange into, and has grown his portfolio to 1,500 units. That guy's done a lot of 1031 exchanges. Many of our clients may do 1 or 2 in their lifetime. The differential of the forward exchange, the most traditional exchange, is what I see the most. I can count on maybe one hand or one finger, the amount of reverse exchanges that I've done. So I'm glad that you demystified that for our audience, for the Calibrate crew here. Something that we had chatted about that differentiates your company, 1031 Specialists, is the ability you're built to scale and grow. And I want to talk about 2 things that are not a part of the 1031 exchange necessarily, but how you're positioned to really grow as a company. You had chatted with me as we were preparing that you've got a scale up program, an accelerator that you'd like to kind of show us also what your the big buzzword in any sort of business right now is, are you using AI, and how is your business moving forward with AI? So I didn't realize what the GPT meant in Chat GPT, and GPT stands for Generative Pre-trained Transformer. And that's something you've gone through an extensive word count basically on your website. And so this is for any business owner, regardless of whether you're doing a 1031 exchange or not. Talk to our audience first about how you AI enabled your website, and if you wouldn't mind just giving the audience just some tips about that.
Yeah, I think for me, it's first starting with the question of what is the problem I'm trying to solve here? And can I use new tools and new technology to be better and more efficient? So for us, we don't use technology to replace humans. We are using it to scale more efficiently. And so, one of the things I started this business about 3 years ago, and we were getting some kind of oddball questions here and there from prospective clients and from actual clients. And well, what did we do? We went to the most expensive, most knowledgeable attorney in the country, the $1,000 to $1,200 an hour type attorney, and we would ask questions. And every answer we got back was a $500 bill. And I just scratched my head after getting enough of these, and I said, well, maybe we can use new tools and new technology to eliminate that cost. And so it took about 8 months, but what we did was gather the entire corpus of 1031 data that exists in this country. And that's things like IRS field notes, technical memorandum, legal opinion letters, the revenue rulings, and the policy itself. And we took 2,000 pages of documents that we gathered and collated, and we fed it into a custom GPT and trained it on specifically on the 1031 questions and information that we had. We launched when we called it Mr. 1031. Okay, so this is it's on my shirt. That's how proud I am of it. But we launched it about a year ago, and since there was some of these light bulb moments that just went off as we were using it and asking questions, and we just said to ourselves, holy cow, like this is better than any human in the world. Why? Because there's a million words that it was trained on, and I haven't met a human that can memorize a million words. And so we started using it internally, and then we just said to ourselves, this is so good, we should let others ask questions. And we then, on our website, you can go to the bottom right and you can chat any question about 1031s that you ever can think of. We even had some of the weirder questions was, I had a client die in the middle of their 1031 exchange, and what's the impact to the spouse? And it answers all of them, and it answers them accurately. And so this for us, this business is about servicing clients. And so much of that and providing that world-class experience, and so much of that is giving people access to information when they want it, right? And it was interesting, I was at a conference last year, I was talking to the head of AI at JLL. And I said, listen, I just built this really great 1031 GPT. I want to give it to all of your brokers for free. And he told me, he said, Jon, the bane of my existence is changing human behavior. I'm going to put it up on my website. Nobody's going to use it. You have to be where people are. He said, why don't you turn that into something I can email? And so 4 days later, with my team, we were able to turn it into an email. So really anybody can even email AI@mr1031.com and get responses back from our GPT. So really for us, this is just a tool to help others get questions, be more efficient, close deals better, and be more informed really about what they're doing.
Right, Jon, a special note for our YouTube watchers and for social media. Let's have you share the screen and actually go through a demo of some of the questions that your AI that you created on your website will actually come up with. And we'll show this to Instagram on my story here in just a moment. Again, we're with Jon Hilley, 1031 exchange specialists, and that's 1031 specialist with an S at the end.com. And he's going to go through his AI product that he created custom for this exact reason.
Yeah, and again, this is not, it doesn't cost any money to use. We just unveiled this as a tool for others to be helpful to clients and prospective clients and partners of ours. So what question would you like to ask it?
Well, I think one of the most common questions that I hear is, if I sell a property, what do I have to do from a purchase standpoint to, like, how much do I have to buy to qualify for the 1031 exchange? I think that's the most common thing that I hear. Kyle, I sold a property for $1 million. How much do I have to buy to make the exchange work?
Okay, so I'm typing in the question just as you asked it. And let's see if it infers from that question. Because what you're really asking about is, what is the my reinvestment goal? Okay, what do I need to hit to get the full tax deferral benefit?
Exactly.
So let's see. I may have to ask it differently. So it's saying to qualify for a 1031 exchange, it's got to be like-kind property, investment, or business use. So to maximize, this is I think the answer. To maximize your tax deferral, you should purchase a replacement property of equal or greater value than the net selling price of the relinquished property. And then all proceeds from the sale need to be reinvested. And then it goes on and on about, you know, the timelines, choosing the qualified intermediary. And then it says, if you have any questions, just reach out or schedule a meeting here.
I love it. Okay, so the next question that we'll ask your GPT is, what are the 1031 exchange timetables? I know we talked about this right at the beginning, but we're going to actually demonstrate this for the YouTube watchers.
And what I can do here is expand
all
this.
you have to do is go to 1031specialist.com and you can do any of your own searches. All right, so Jon, what does it say?
Two critical deadlines. The ID period is 45 days from the sale to identify replacement properties, and the exchange period is the full 180 days.
And just as a reminder, those are two simultaneous deadlines with the same start date. So a lot of times people will forget it's not 45 plus 180. The 45 days, that's the first 45 days of the 180. It's only 180 days.
You know, and one more note there is, these deadlines are firm, meaning if they fall on a Saturday, a Sunday, or a holiday, you need to have closed your purchase and your exchange on that Friday before. But one thing you can do, Kyle, is you can just go here, you can download the answer and send it to a client, send it to a friend, or just save it for later. So
that's really cool.
Yeah, it's a simple tool, and it's here for free for anybody to get more informed and more knowledgeable.
So for those that, again, are actually watching on YouTube, see this, if you're listening to the podcast, we're going to drop a link to 1031specialist.com. But what Jon's pointing at is the little download button that we all see in our email and others. Once you ask this series of questions, you can download it and it'll send it right to you. Jon, what happens if you click that?
Yeah, you just
downloads it.
It just shows up as a PDF, and you can save it.
Man, that is a game changer, because here's the biggest thing that I think about. Not only you had said, what human, can memorize, millions of different terms and repeat it back with accuracy. My other big thing, and this is the reality of anybody in the real estate business, people panic, and that panic sets in at about 11 p.m. at night, depending on what time zone you're in. All of a sudden it could be 1 a.m.
Absolutely.
and they've got these questions, and you and I are, fortunately sleeping. we're not open for business, but the website created is always open for business, isn't it?
Well, that's the thing. I mean, the advantage is it's available globally 24/7. It doesn't sleep, and it literally has every bit of 1031 knowledge that has been created in this country. And so it's robust, it's accessible, And again, you can use it on the website or you can send an email. Either way, it works.
Let's go out of this screen and back to
Yeah.
the main page on your website just to go through that file path for anybody watching real quick, and then we'll get back to the audio portion of our podcast, John. So you
Yeah, so
start from the main page, 1031specialist.com.
yep, and you'll see this little question mark on the bottom right. Pop it up
And
and
it's
start
just the
typing.
chat box, which we're
Click.
all becoming very accustomed to.
That's right.
Awesome. And you can just fire away at all your questions. Um, Something fun for me, because I love to give things away. I will give away two of my favorite books to any podcast listener that goes to 1031specialist.com, puts in two questions, just two questions, because that helps build all the AI and the GPT, and then downloads it and sends it to me. If you go ahead and do that at kyle@calibratere.com, I'll go ahead and send you a book. We'll just need your address to do that. John, that was fantastic demo.
Awesome.
Let's do stop on the screen sharing, and we'll go back into the rest of our interview. Okay, so why move from Goldman Sachs and do 1031 specialist? What was your catalyst for doing that, and just kind of the journey for you as an entrepreneur?
Yeah, so I sort of look at my career as in three different phases, right? In the first phase, I was an investor. So I was researching companies, first at Goldman, and then I went to a long short deep value hedge funds in Miami, Florida. And then my mentor at Goldman started a family office. So I ran research at this family office for a number of years. We started investing in companies. And that kind of launched the phase two of my career, which was I had been investing for a decade. I wanted to then operate businesses and really understand the mechanics of how they work and the humans around those businesses and how to make it all fly. And so that kicked off about another 10 years of my career as an operator in businesses. And the last one, I sold the business. I had a year of garden leave to figure out what was next. And I started working with a buddy of mine, who's now my partner, on a different idea in real estate related to the DST products. And the conclusion after 6 months of research was that's a cool idea and it should be built, but I don't want to spend 5 years of my life building it and raise $50 million. I had just done that with my last firm and I wasn't going to do that again. But inside of that ecosystem that we were contemplating were these weird firms called qualified intermediaries. And I said, I don't want to do this big thing, but that little thing down there is really interesting. And the more I dug into the profile of a qualified intermediary, how they run their businesses, what's the economic model behind qualified intermediaries, I just said to myself, that's the thing I really want to do. And I have said this to friends and to family. I believe the qualified intermediary niche is the strangest and smallest niche in commercial real estate. There are 222 firms that operate inside of this business, but only 10 others have more than 10 employees. So there's a lot of single person firms and sub 5 employee firms out there. And yet, even though there is less than 1,000 people in this country that do this kind of work, there is $100 billion that flows through QI's hands each year. And so you have this dynamic where you have a really tiny niche that's pretty much been, nobody really thinks about, that is responsible for a disproportionate amount of client money. And you just look at these dynamics and I said, I think I can do something interesting here. And so, yeah, so we had a thesis going into this, and the thesis was, let's build this brand. And as the 65-year-old owners of QIs are ready to retire, let's make some acquisitions and let's build also by buying. And so, yeah, so we have done both pretty successfully. We started 1031 Specialists about 3 years ago and just learned the hard way. right? Just grinded to win the first clients, to win the first partners. And it all started working. It started generating enough cash to reinvest in employees, into the business. And then about a year ago, we acquired a larger and much more established qualified intermediary out of Southern California called Safe Harbor Exchange. And then shortly thereafter did another fold-in acquisition as well. So we are taking very much the approach of what I learned in phase one of my career as an analyst, and using the tools that private equity uses to build this business in this very small niche.
This is a sidebar, something that you said, but I want to drill deep for a second because I sold my own company, which had 9 brokers, 2 full-time staff, and my wife and I owned it. What does an acquisition look like for you, John, both as the person who's acquiring companies, but then also your time in investment banking? What does a good acquisition look like? Not quite literally like the return or the 10x or whatever people will talk about on different podcasts, but like, what do you think makes a good acquisition partner, in your experience as you've been helping companies get ready for a sale?
There's so much to unpack there, but I will first pull out a Warren Buffett quote, which is my primary due diligence is the price I'm paying for the asset. Okay, so if you buy any asset cheap enough, then you are de-risking mistakes that may happen and providing yourself the opportunity to make money from that acquisition and turn that into a good thing. And that's true in real estate, that's true in operating business, it's true everywhere, right? Pay the right price. What's the right price? Well, I don't know. But an old hedge fund buddy of mine told me, as it relates to public companies only, he said, if you can buy a public company at less than 5 times EBIT, I don't care what industry it's in, I don't care if it's in secular decline, close your eyes and buy as much as you possibly can. And so you can kind of use that as a rubric for what is value, right? 20% cash flow yield is value. You should buy a lot of that if you can, right? And so for us, this business doesn't have any institutional capital inside of it, materially, other than us kind of coming in. I mean, I think we're the first QI in 20 years that has raised institutional capital. So we have a bank out of the Southeast that's publicly traded that lent us money to make this acquisition. So it's a small niche without a lot of liquidity, and so I'm able to get prices much more reasonably than probably an HVAC business these days. So that's a key part of it. And then in terms of the operations and how it all works, look, we started to really understand this business, and all of the other competitors have a very complementary business. We just have built a better engine powered by software where everything is automated to the maximal extent possible. And so it's easy for us to take a business run off a fax machine, plug that into our system, and have it work a lot better. Does that make sense?
Makes a lot of sense to me. Now, what I'll say though is that the majority of my clients that have these big questions are, I hate to make it based on age, but they're 70 years and older. And where I sit a lot as an advisor for these commercial real estate clients in my day to day is I'm sitting there answering some of these questions or pinging, just a simple old conference call. So AI driven technology efficiency, I'm all for it. I think that's where our world is going. But a lot of the wealth in this world is held by these folks that are 70, 80, 90 years old.
Right.
So how does that look for you as a company? Are you targeting kind of the younger audience, or are you doing 1031 exchanges for old that they can sort of do it old school?
So the profile of our clients are exactly the same as yours. Our technology is invisible to our clients. So if you go to one of the big four firms that exists in this country that do exchanges, that is, competitors are IPX 1031, First American, Asset Preservation, and Orexco. You can go to any of these four companies and you will generally have the same experience. It will feel a lot like a transaction. Whereas over here, because of this technology that underpins what we're doing, we are allowed to have our exchange officer team that's liaising with clients and getting their exchange done. They're not trapped in the tedium of the documents and the work, okay? They get to float up and actually have a relationship with their clients, with our clients. And so for us, I just think, number one, the technology is invisible to all the clients. And it allows us to be better at the thing really that's at the core of this business. This is a client service business. And I think the reason we're winning and we're taking market share each day is because long ago, the bigger shops, the ones that control 80% of this market, they forgot it was a client service business. And so we do, we even did this thing called the Client Happiness Project internally, from which we now send physical cards in the mail to each client after their kickoff call with us. We send them a pair of socks in the mail as a token of appreciation. And so we're using technology to be able to do these things efficiently as we scale. And never forget that the relationships and the people are what this is all about.
I love that. That's true. As much as we use technology to make our lives more efficient, you can't forget that the soft touch, the soft people skills, and tech can make that better. You can automate that process. You can find ways to make it more efficient. But I love how you combine the new thinking with just those tried and true things that we all know make a business transaction feel really personal and feel really special. So again, I'm with Jon Hilley, 1031 specialist. We're nearing the end of our time together, Jon. We got about 10 minutes left. I'd love to ask you some follow-up questions that I thought about as we were talking through this, and then end our show with a question that I think is just a personal life journey question that I ask all my guests. You ready for it?
Yeah, good.
All right. So something you had chatted about prior to ending our show here, you had shared that there's really less than 300 qualified intermediaries out there, and many of these folks are, a company of one or two people. What I find interesting, and I'm asking this question because I think our listener will have the same question. What I find interesting is that many of those larger firms, you mentioned the big four, are backed by banks or title companies or some sort of combination of the two. And so for someone that's used to API, used to IPX, used to any of the other acronyms that are out there, but there's a local bank that's a big bank here in Colorado that has a 1031 exchange, and a lot of people feel comfort in working with sort of like the big bank or the big title company for convenience, for maybe some sort of security, safety, et cetera. How would you, this 3-year in company, but ran by some smart people, how would you sort of demystify that process of, why go work with a big bank when they can work with 1031 specialists?
It's a great question. I kind of think about it differently though. To me, it is not the case that this is a zero-sum game, meaning 1031 specialist wins and IPX loses. That is not how I think about this market. In fact, the biggest opportunity out there is in educating real estate investors about the power of this tool, this 1031 exchange tool. Today, only about 1 in 7 commercial real estate transactions is 1031. Okay, and it should be closer to 1 in 2. This is a completely free lunch given by the US government. It has immediate benefits on the first exchange And if you keep rolling and deferring and deferring and deferring, it has enormous benefits. The compounding effect is, it's almost unbelievable. And so everyone should explore a 1031 exchange. And what I mean by that is, if you're selling your investment property, hire a qualified intermediary, 1031 specialist or not, and create this optionality so that if you find a replacement property that's at the right price and is the right asset for you, then you get to defer your taxes. Now, if you hire 1031 specialists and you do not identify what you want to buy, well, we'll just give you our small $1,200 fee back, so it's actually costless. So for me, it is so much of what we're trying to do is educate the market about this and eliminate the calls we get every week from investors that say, hey, I just closed yesterday. I'd like to do a 1031 exchange. Where can I send my funds? We get those calls every week. And if you haven't hired us prior to close, the opportunity to do your 1031 is lost. So for us, those big four firms, I don't know if this is intentional or not, but they just haven't spent really a penny on marketing. And our goal is we are going to show up in front of investors, in front of partners everywhere, so that the incidence of 1031 goes from something like 1 in 7 to closer to 3x that. And if that happens, everyone's going to benefit, but most specifically, real estate investors are going to benefit.
It's amazing to me. One of the things that I share with my clients very often is, no matter what, if you've got a gain and you're not sure if I'm going to find the right property, hire a QI. Your minimum investment in giving you the ability to do a 1031 exchange is the $800 or $1,000 or $1,200 or 15, whatever the cost is for that particular QI. And you're saying that you'll actually refund that if someone decides not to complete the exchange, which I've never heard of.
Money back guarantee. If you do not have a
Wow,
successful exchange, we give you the feedback.
that's amazing. And gives people even that much more reason, like, hey, you're giving yourself the opportunity for success. If you don't find the right asset, hey, that's fine. But we all know, and brokers are very good at this, someone closes a property, it shows up on Crexi or CoStar as a sale, and all of a sudden brokers glom onto that investor and say, hey, I got this deal for you to do a 1031 exchange. And all of a sudden something falls in your lap that could have been a perfect replacement, but you didn't start the exchange. And once that sale date happens, once the money is sent to you or not to a QI, you can't turn back time there.
Optionality is so much of opportunity in life. So yeah, maintain the
Jon,
optionality.
as we finish up, I'll ask our final question. But before I do so, what are some ways for our listeners to reach out to you, either personally or to your team at 1031 Specialists? What's the website again, and then a good phone number?
Yeah, so it's 1031 specialists with an S at the end.com. Call at any time, literally Saturday, 8 p.m. If there's a question, call. If we do not answer within the third ring, you'll get a call right back. And it's a human that's an employee of this company that exists in this country. So you're talking to real people here. 631-438-1031. That's 631-GET-1031. And then, of course, if you have email questions, reach out. It's just Jon, Jon, at 1031specialists with an S at the end.com.
Final question for you, and it's personal, but it's with that framework of the person that's listening is a high achiever or has desires to make it through their next set of goals. It's a thought-provoking question. It's this idea of "Dear Younger Me," which is based off a song I really like, and I sort of tied it into a nice sort of little phraseology of what's the advice you wish you knew when you were 22, when you're first getting started, maybe just graduating college, and you're embarking. If you could go back in time and come to Jon, the 22-year-old, what advice would you give yourself? It could be personal or professional.
I think I would learn how to breathe. It's the most simple thing, but you know, I do this with my 9-year-old now, but there's a 4, 7, and 8 breathing technique. It's breathing in for 4 seconds, holding it for 7 seconds, breathing out slowly through your mouth for 8 seconds. So 4, 7, and 8, it's basically a body hack, a system hack to reset emotionally. And if you can just do that, the hard times become a little bit easier, and you sort of round out the peaks and the valleys of life. And yeah, I think if you can do that before speaking, I'm still trying to teach myself that if you can do that, it provides this opportunity to think better about what you want to say next. And so yeah, breathe. Learn to breathe is what I would tell myself.
That That's great. Have asked that question to quite literally 200 high performers, and I don't know if I've ever gotten that particular answer. And it's a plug for a different guy and a different podcast, John. But if anybody in our audience has ever heard of Jefferson's an attorney, maybe you've run into him. He's got a great Instagram. But Jefferson talks about some negotiation tactics as an attorney, and one of his big things I saw Jefferson speak 2 months ago here at the Denver at a big entrepreneurial event. It was hosted by Dave Ramsey, and he talks about that. He actually talks about how to approach difficult conversations, negotiations, and a lot of it is breath work. So this isn't like hippy dippy woohoo, like or let's think about yoga, Pilates, meditation, which all have an appropriate space in our physical and spiritual world. But I think this is something that can practically be done on a regular basis, just sitting in your office if you're dealing with something that's difficult. So thanks for that advice. Jon Hilley is our esteemed guest today on the Calibrate Real Estate Podcast. Jon, I am so thankful for your time today. And as I love to say, for those in the real estate world, Jon Hilley and I, we will see you around the neighborhood. Thanks so much.